Good day, Inderes TV viewers and listeners. Sampo published its second quarter results today. I'm interviewing Sampo's Group CFO, Knut Arne Alsakeria. We are sitting here in IF's Stockholm office. Thanks, Knut, for having me here.
Welcome to Stockholm.
Thank you. How would you describe Sampo's development during the second quarter?
Second quarter was for Sampo a solid development. Continued good top-line growth, both in the Nordics, but not least in the UK. A solid underwriting development in terms of margins. In Q2, specifically slightly offset by a couple of large claims, but for the first half year as such, large claims was basically in line with budget. And then topping up a strong underwriting performance, we had a good investment result. So all in all, a solid performance.
Could you give some color or illuminate that you grew, I think, underwriting premiums grew well over 10%. I don't remember the exact number, but it was well over 10%. So was it driven by volume growth or did you do large price hikes?
Yeah, for the second quarter, the group had a top-line growth of 11%, with more than twice that in the UK. It's primarily driven by price increases, not least in the UK, where price increases was significant last year. But we're also growing in volume, and volume growth picked up not least in motor in the UK compared to the first quarter, and continue to grow in policy count significantly also in home. And in the Nordics, we continue to grow in some of our growth focus area, for example, personal insurance in terms of policy count.
Exactly. How about investment returns? I think they were, of course, they're quite hard to forecast, especially from quarter to quarter, but they were above the consensus forecast. What was behind that?
I think the main driver versus consensus on the investment side was the fact that short-term rates, not least short-term Swedish rates, dropped in the second quarter. And on the asset side of our balance sheet, that's where we have the most exposure in our fixed income portfolio to Swedish short-term rates. And then long-term rates increased, which means that the discount rate we use to discount our liabilities increased, which gives a positive effect in our net financial result. So a positive effect from decreasing rates on the investment side and a positive effect from higher discount rates on the liability side. That's the driver of the beat versus consensus. And this is primarily related to our Nordic business.
And if I recall correctly, most of your investments are in different forms of debt or bonds and not that much equity.
Yeah. No, we have around roughly 90%. It varies from time to time, but around 90% in fixed income and 10% in equities. It can be 88, 89, and 11 and 12, depending on sort of where the markets are and market values and so on, but roughly 90-10 in terms of mix.
You mentioned the almost aggressive growth in personal insurance, and I'd like to have one follow-up question about that. Also, back in the capital markets day, you said that you aim to have more growth from personal insurance, also including personal health insurance.
Yeah.
In Finland, at least in Finland, I don't know if other markets in the Nordics as well, some competitors like Aktia have quit the health insurance business because they say that it has too low profitability. So what's the point why If wants to grow more there, and is it profitable to you because of a bigger scale or something like that? How would you comment?
It's difficult for me to compare and comment on other companies and their decision-making process. In terms of Sampo and our Nordic P&C business, And If was established back in the days without a personal insurance portfolio that was retained by Storebrand and Scandia, who was part of forming If. So If didn't really have a presence in the personal insurance market. The starting point has been low. Then, of course, we have developed attractive personal insurance products over the years. And it is a segment of the Nordic insurance industry with much lower penetration than motor or home insurance, which means that fewer people have that product. It is a demand for such products, which is increasing over time, also because people want to have a good alternative to some of the services, in addition to some of the services that the public healthcare system offers in our Nordic home markets. I think it is attractive products that we have because customers like them and sort of renew them. We also have a wide variety of personal insurance products which fits different people in different stages of life. And that's really what drives the growth. I wouldn't call the growth aggressive, but more a natural result of the fact that people want to buy the products that we can offer them. And given the low penetration, there's no reason why this growth should materially slow down over the next 2 years. That's also why we have an operational ambition to have a growth of 7.5% in that particular part of our business, which is a bit higher than the ambition we've set for some of our other products.
I think one legendary insurance business leader has many years ago said that there are no bad risks, only bad pricing. So would you say that you have very good pricing in these health insurance products, and for you it's not a bad business at all?
It's not a bad business at all. It's a profitable business, and I think there's a lot in what you're saying. But also in the personal insurance segment, you need to be underwriting focused. You need to have the right price for the right risk. That's absolutely true. Also for those type of products.
Exactly. One question about Hastings. For some years, at least when we have followed Hastings, it has a lot higher combined ratio compared to If, which of course have top class combined ratio. But nevertheless, Hastings has a return on equity of almost 20%. So does it have lower capital requirements? So what explains the quite high return on equity, even though the combined ratio is higher compared to other operations?
Yeah. Now our UK business is fairly capital light. It's short tail business, sort of you could say simple products, if you like, which require a little bit less capital than longer tail products, for example. Then to create profit out of non-life insurance wherever you are, it's not only about the margin. It's the combination of growth on the top line, and of course an adequate margin to create that return you are mentioning. And our possibility to grow in the UK and UK PCW digital insurance market, we saw even in the last quarter, is clearly there. And we try to adjust the balance of growth ambitions and healthy margins to create that attractive return on capital. And the optimal combination for us, as we see it, is not sort of the same combined ratio level as we have in the Nordics in our UK business Hastings. It's a little bit higher, but still clearly a good and robust margin to create that return on capital.
you grew over 20%. So does that mean that you also took market share because the growth seems it's very high?
We have taken some market share in new sales over the last quarter. We absolutely have, where we grew compared to the first quarter policy count during each month in our motor business, and of course we're continuing to take market share with the strong growth we also have in home.
Then we'll move to the hot potato in the mouth, Topdanmark, which has been a subject of speculation for at least 10 years. When does Sampo buy Topdanmark? And this summer you finally said that you're going to buy Topdanmark and make exchange offer. Why is this good time to buy Topdanmark?
Yeah, no, we have of course followed Topdanmark and been interested in Topdanmark for almost 20 years, probably even more, but we started to buy Topdanmark share almost 20 years ago, 17 if I remember correctly. A few things have changed, which made this a natural point in time for us to reconsider or to update our business case. One is the simple fact that both Topdanmark and Sampo has become simpler companies. We're both pure play P&C companies these days, where Top has sold their life company, we divested Mandatum and sold our Nordea shares. So there's less complexity in what we buy, and there's less complexity in what we offer Top's shareholders to be shareholders in. So that's one thing. But in terms of the business case, maybe the most important thing in terms of why we have been able to have a slightly different view on synergies and value creation for Sampo shareholders is the growth in digitalization. And how insurance products are produced and sold and how customer service is done. Digitalization is even better for our industry with scale. In other words, better for Top to be a part of a large company, also better for us to grow in Denmark and create a scale in Denmark sort of to the same tune as we have in the other Nordic countries. So the fact that digital is sort of the new black for P&C insurance, that's creating more synergies and made it possible for us to update our business case and find a price which we found attractive for Sampo shareholders as well as for Top shareholders to offer in the market, which is what we now are doing.
At least our analyst said, and I think it's the consensus among investors, that the price you pay for Topdanmark looks quite pricey or quite high unless you get all the synergies through. So I think that one of the key, of course, it's very good for Topdanmark investors because they now get the value creation for synergies up front, if one can say so. But I think the key question for Sampo shareholders is that what are the main risks you see if you don't achieve those synergies, or do you see that it's almost done already, if one could say so?
Well, it's not done with the fact that we first need to have 90% acceptance to be able to start to realize those synergies. So that's the first step. Which and by the way, we're starting the offer period now. Tomorrow, just published the prospectus, and hopefully we're there in 4 weeks' time. I think you're absolutely right that for Sampo shareholders it is important. The synergies are important. That's what we base our business case on, which sort of wouldn't have been different in any circumstances as well. And that's what I'm saying, that we think that the synergies is slightly higher compared to what we, with a really high degree of confidence, could have said some years ago. And that's what we really have based our business case on, a really high degree of confidence that these synergies are something we will be able to achieve, both on the cost side, which is the majority of the synergies, and a lot of that is related to IT, as I just commented on, but also our competitive position in the Danish market, which of course for Sampo, without top, we're a much smaller player, particularly in the private and commercial segment, compared to what we now will be in together with top, which means that we believe that we will also have a possibility to grow and be attractive, not least on partnership deals, which we are in other Nordic markets, where we join forces with top and create a Danish powerhouse in P&C insurance and a complete sort of Nordic If and Sampo business. So in terms of the synergies, we wouldn't have made this offer if we didn't have a high degree of confidence of realizing those synergies. And by the way, as you might have seen in the investor presentation, which we published today, we today state that we have realized the synergies, which we announced after having bought Hastings. That wasn't a synergy deal, based deal. But it is it is a proof that we realize the synergies we tell you that we will realize.
Indeed, you have very good say-to-do ratio. With Top Denmark, assuming that during the next month the deal goes through and so on, so the synergies will be realized in the next 3 years, was it so?
Yes, full effect from 2028. But of course, it will be a linear progression where we will have synergy realization also in 25 and 26, and of course when we go through 27, a lot of the work will start to be done with full effect from 28.
Thanks, Knut, for the interview. Good luck with the acquisition and looking forward to our next interview.
Thank you, likewise. Thank you for being here.